Fidelity investments in trends in industry usually depend on economic conditions. Financial markets absorb a massive amount of information on a daily basis that collectively influence the prices for individual securities, including bonds and stocks. One major source of information comes from the economic indicators. These help provide investors with insight into the environment in which financial markets operate. These indicators can influence security prices if they offer unexpected clues about economic conditions. Indicator classifications. These classifications are grouped according to the point in which they are most effective measured. There's lagging, which reveals what has happened. There's coincidence, which reveals what is happening. There's leading, which reveals potential willing to happen. And this information may forward investors to predictions about the economic conditions. Some strategies and profitability that Fidelity investments use. They use counter-trend strategies to seeks trade in opposite direction of the apparent trade after detecting a larger than normal price deviation. It can successfully be traded with trends as the following. These characteristics of trends experience a large number of trades that have relatively small losses in order to catch change in the existing trend. Fidelity investments trends in profitability. They usually depend on counter trends. Counter trends seek to enter a trade in the opposite direction of the apparent trade after detecting a larger than normal price deviation or overbought or oversold condition. Counter-trend strategies are often successful with the following strategies. The COM signals with profit targets. The COM seeks to enter the market when prices are low. COM value of less than negative 50%.
Fidelity is a privately held company that provides financial services and investment to individuals. Now, SWOT analysis is an acronym. It stands for strengths, weaknesses, opportunities, and threats. Now, every company uses a SWOT analysis to evaluate its own strength comparative to other companies. Now, Fidelity itself has many strengths. Obviously, it is the biggest mutual fund company. It offers the most mutual fund, over 16,000 more than any other company. It has very strong brand recognition because it has been in very many magazine studies. One of the examples is Smart Money, where it ranked third in all mutual funds. It does have the investors that work for Fidelity have the expertise in the field that provide information to potential investors. And it does have one of the biggest strengths right now, the way the economy is because there's other banks that are failing. It eliminates the competition, so it leaves Fidelity even more strong compared to the other ones. Some of its weaknesses, it doesn't have the undifferentiated products and services. Many of the mutual funds all offer the same exact product, so it's not different from any of the other companies. The managers themselves, there's very limited flexibility in their investments because they manage billions of dollars. It's the biggest mutual fund company in the United States. And because of that lack of flexibility, the profit margins can be very small. It's been considered very, very safe in regards to returns for investments, but the investments returns are not normally very high. Also, one of the other biggest weaknesses is that the investors will normally, the way the company is set up is that after about 2 years, the investors will really have reached the top of their game that they can, and most of them will leave to hedge funds. Some of the opportunities that Fidelity has individually is especially developing markets, including China, because the company is based out of Boston, Massachusetts, but one of its other biggest hubs is China. More so, the internet is also a very big place for new markets. One of the two new places that it's expanding is in life science tools and healthcare IT, which is information technology. Those are the biggest places because of the new healthcare bills that are being passed here in the United States. It gives a lot of opportunity for new healthcare companies to broaden their investment opportunities. And then more so just the mobile outlets, it differentiates them from different companies by having the mobile investment stuff on your phone and on the internet and whatnot. The final one I'm going to go over is threats. Now, there's always a competition threat of other companies, but because of the economy, there is a loss of the lack of faith of investors in the stock market. So that can always hurt the investment opportunities. There is also the changing technology. Every year there's new technology, new companies come about, that it leads to different unexpected returns. So the Fidelity itself has about 10% of all technology stocks here in the United States, and the difference in the technology can lead to really different returns, whether they be negative or positive. And finally, the removal of the stimulus policies that the United States has right now. For the last few years, there's been a lot of money pumped for stimulus packages, but because of the lack of, if we don't know if the stimulus packages are going to be around for a while or not, that's a concern for many investors. But overall, Fidelity did rank top 10 on mutual funds as far as a good, top 10 being the most risky, 1 being the least risky. As far as investment opportunities, it ranked 3rd out of that 10, according to Smart Money. So according to my SWOT analysis, Fidelity is a smart company to invest in.